Good evening, everybody. Had this one out for the weekend. All right, we'll get started. All right, as we mentioned on Friday, that being able to recognize the pattern setup, like a big dumpling top, as we saw in the markets. JS, now it's only ugly if you're long, which in this case right here, it told us when they couldn't get back up above the T-line and they broke this little support level, that this could be the beginning of our dumpling top breakdown. So somebody might type in for Elsie she might have to reboot. Yeah, so I'm, as of the end of today, I'm pretty much in cash, except I'm still short live cattle. But anyways, this is to illustrate. Tom, it's not. Yeah, this should be a learning experience, or whatever they call it. When you start seeing this has meaning. This big slow curve, just like a fry pan bottom, has meaning for a big huge breakout. So especially when they started breaking this down, we knew that either this trend change is support, but the fact that we had kind of a little bearish J-hook pattern, that we were breaking resistance, and we were starting to trade that far below the T-line, told us this could be the beginning of a dumpling top breakdown. So, a teachable moment. Okay, that's right. Mavis. Yeah, Mavis may have to figure out rebooting or logging out and logging back in. So anyways, with this setting up that way, and the NASDAQ at the same time telling us that this little wedge formation was breaking, plus it closed below the 200, which is also below this support level. This was giving us all indications that the sellers could be coming in pretty strong. And so does that by itself tell you there's a breakdown of the NASDAQ? No, but if you equate it along with what's going on in the S&P and the Dow, where everything was starting to break, that was what at least put you in. The mic is too close. How do you expect it to go? How low do you expect? Have no idea. This is probably getting to the point where if it goes lower, I would suspect you would start seeing the S&P, the Dow, all starting to kind of churn for a few days. Meaning they may bobble in here for a few days before they can start back up. So have no idea how low they could take this. But this is the expectation of at least being, this is why this is not a miserable market or a lousy market. This is a great market if you were set up going short. What signs to look for? The reverse of things that would tell you that there's indecision, like hammers or a doji, spinning tops, a bullish harami, any of our bullish signals. But with our stochastics not quite in the oversold area, I would suspect what we're going to see is a few days where They take it down, bring it back up, then kind of just waffle in here. Now, is that what it's going to do? I have no earthly idea, but that's my suspicion based upon they've taken it down hard and didn't bring it back up today. Yes, the S&P was... I keep doing that wrong. The S&P did do a doji type day today. But again, notice your stochastics aren't to the oversold area. So that means they could waffle down or even test the low again to see if it's going to hold. And the transportation index also did not show anything that was going to tell us there's been any change of investor sentiment yet. Let's see if I can do this. You're right down in this range of this bottom of this trend channel. So I would suspect at least some more sell-off a little bit. Only because we're waiting for the stochastics to get into the oversold area. Oh yeah, Jim or John, yes, that's exactly why you look at the pre-market futures, because that's going to give you a good idea. I would say that occurs probably 95% of the time, and that's why we always say watch to see how it's going to open the next day, because prior to the open, we can see what the futures are doing. So if we have a doji in the oversold area, and the next day we can see the pre-market futures are trading positive, we know we should be ready to buy whatever that entity is or the markets. That's just going to give you a little bit of a lead-in to tell you which way that market's going or where that price entity or trading entity is going to go. Plus, if you see say a doji right on a major moving average, like the 50, the 200, or the T-line, we know if it's going to move in the direction of how they open it after that doji. So if we wake up the next morning and see that the pre-market futures for that stock and or that market index is opening positive, that's telling us they're not going to resist at that moving average. They're going to move higher. Fabio, you can find the pre-market futures. Usually I have CNBC on in the morning, and if Jim Cramer's on, I usually have it on mute. But there will be little indicators at the bottom of the screen showing you what the futures are doing. And you can usually see those on most trading softwares. I mean, TOS, TradeStation, all of them have indications of what the pre-market futures are doing. You can either be looking at the QQQs or, in the case of the Dow, the YMs, the SPY, that sort of thing. Yes. Yeah, I mute Jim Cramer's. I go to the point where if I have, sometimes I'll have 4 or 5 TVs on CNBC throughout the house, mostly muted. But if I can hear his voice somewhere on a TV, I'll make a special trip upstairs to put the sound off. Okay, the other ones that were moving, crude oil. Crude oil, as you can see, ever since it broke down from this level, been in a downtrend. It's trading at 38.40 right now. And remember all the hype within the last year when it was probably trading at about 100 or 115? Let's see where it was. Oh, all the government officials wanted to say how terrible it was that you had speculators in the oil market making it bad for everybody. Well, that's when they were trading at 115 or whatever. and now they're trading at 38, and you don't hear anybody complaining anymore. So anyways, crude oil had a big down day today. Make it just a little bit bigger. And the bigger the down move at the end of a trend, the more likely you're going to see a reversal. Based upon the probability of retesting lows tomorrow, could an effective strategy be to set stops based on Friday's candles and let the today? I wouldn't use Friday. I'd probably use if you're talking about watching the market itself. Yeah, if they're going to come back down and test the lows, this is why I was telling everybody today, watch what your 10-minute chart is doing. And they bottomed it out here with a bullish Harami in the 10-minute chart. Where was the next likely bounce? Up to the T-line. They took it up again and brought it back down. And as you can see, midday, they were pretty much trading mid-range, which told you they weren't buying. Had they closed it up here, obviously we would have had a, the market is up 237 right now. It is. Pre-market futures up 235. So that's why it will be important to see what type of open you have. If it opens up 235 points, I don't know where that takes us. So we're back up in this range. Just watch to see if there's a what type of signal is setting up. If it opens higher and then starts drifting, then I use today's open or close. But if they came back down through there, that's telling me the bears are still in control. Yeah, now look for the test of the lows. Let's see. I'm short cattle because you can see how you have this bearish J-hook pattern, and when they gapped it down today, showed us that this resistance level or support level was not going to act as support. And I'll be ready to short this some more if it opens lower tomorrow. Then we got that bearish doji sandwich, which means this wave right here and this wave right here should be equivalent. There's still more downside. Is this based on Japan open? I have no idea. Chinese market's open in 45 minutes. Yeah, we'll have to see what that does. So somebody remind us what happened in, would you cover if positive open? I covered most of my shorts today, and I'll get to that here in a minute when we get through the commodities. Oh, what is this one? Z. The dollar, as you can see, when it started rolling over on that little bearish J-hook pattern, had a big down day. It's opened up a little bit positive right now, but would still watch to see what, see if they're still trading this lower, which meant the euro came up through. There's your fry pan bottom, and there's where you'd like to see breakouts. Notice what happened at this breakout point. It was right where the beginning of this fry pan bottom started, number one. And number two, you had the added benefit of seeing whether it was going to get through the 200-day moving average, and that's what everybody else was watching. So as soon as it started trading positive, that was a good buy, especially when you could see it start moving positive. That told us that they were breaking out through this level and not resisting anymore at the 200. The British pound, nice fry pan bottom, and where are we? Right about the same level as where that little congestion was. Opens lower right now. I just put a buy stop at today's close, but if it comes up through there, they're breaking out. New Zealand is already open. I'm sure all 4 or 5 of those stocks are moving around. I discovered from people from New Zealand that I think there was 4 million people live in New Zealand and 60 million sheep. Okay. All right, so let's go back to how you, this is, again, I was mentioning on Friday that these are the days where you can make huge profits. And as we woke up this morning, we could see that the pre-market futures were down 825 points, and did get to that level. So there were stocks that we were short. For example, when Apple gapped down that much, it became a very simple trade. It opened here and started trading down. And because of the graphics of candlesticks, we could see that if they took it down and brought it back up through the open, it would start to trade positive. That had to tell us there was buyers already coming in. So we closed out our short on Apple and covered our puts, because what do we usually expect when you're sold off that hard and you see a gap down in the oversold area? You expect some sort of candlestick buy signal. So there was lots of stocks that opened lower, traded down, and once they came back up through their open, it was time to cover those positions because we knew where we were. We were already well in the oversold area, and we were kind of identifying one of our most simple analytical tools, which is how far away were we from the T-line. And the further you are from the T-line, the more likely it's going to come back up. So this is where if you see something huge to the downside, that's where you flip to your 10-minute chart. Now, even on the 10-minute chart, it wasn't telling you anything until it came back up through here. So if you can see it's moving pretty quick, then I flip to the 5-minute chart. 5-minute chart, the same thing. If I can see it start moving up, even on the 5-minute chart, that tells me once they got down in this area, you can see it starting to create a tail. You could always cover those short positions. So the reason I'm emphasizing this point is there's been so many years prior to candlesticks that if I happen to be in the right place at the right time and had huge profits down here, I would, at the end of the day, say, dang, why didn't I take profits down here? And now at least I have a trading platform to tell me when it's time to come out of those positions. Amazon, that came up and came back down. Now Amazon has a different story to it. Notice it came back down. We're not in the oversold area. Amazon, if this market opens weaker, on a day trade type basis, you could short this one again, anticipating you've got kind of an island reversal up here. You've got a gap up and you've got a gap down, or a gap down right at this area. They're probably good probability they're heading down to the 200-day moving average. Let's see. Max, I had that problem too. And one was fortunately in my favor. I was trying to, this doesn't seem right. It's saying that LEX closed off 23 cents. No, it did close off 23 cents. Except my puts were up $650. Unfortunately, I was trying to cover those puts when I was up about $1,500. And I put in the order, and it was a limit order. I inadvertently did. Then changed it to market, and still never got an execution. Yeah, and that's why even with the super liquid tickers, usually when I clicked on my trades, like when I took profits on the Apple options, usually within, I'd say, 2 or 3 seconds, you get an execution back. Today, it would take probably 5, 10, 15 seconds. So you're sitting there wondering if they got the got the trade, because as I say, one went through and a couple went through and a couple didn't. So you didn't know which ones had gotten executed and which ones didn't. So that's unfortunately the cost of doing business. I mean, there's nothing you can do about that because everybody was probably having that problem. I'm trying to think what else. Looking at this one to be another short. I'll get to the shorts here in a little bit. But see the slow curve? Now we know very simply what this will do. If it opens lower, they're still taking it lower. If they open it higher and start bringing it up, that means they're at least popping it up. Nugget, I should have gotten out of today. It was when I went to the doctor's office, it was trading positive, so I didn't worry about it. When I came back, it was coming back down. So if this opens lower tomorrow, I'm going to be closing out everything. It needs to open positive and trade positive to keep this channel in effect versus opening lower and putting in this channel in effect. And that was because gold prices backed off a little bit, but as you can see, they're still trying to show a little bit of support here after hours. This is big enough we can see. This is today's trading, and then this is after hours trading up a wee little bit. Elliot, I should have gotten out of Nugget today. The only reason I didn't is because I wasn't paying attention. I just had gotten back, and so this one, after it started trading lower, yeah, I should have been out of it. Okay. On Apple, is there a signal? Not really. Remember, a belt hold needs to come into the back into the trading range. This one didn't. This was just bounced up. Take a look at the other ones. SGU. SGU, I don't have that written down, but that is a belt hold bullish engulfing signal. So that has a lot more significance because it did come back up into the trading range. Whereas something like Apple, that even though it traded positive after the open today, it didn't get back into the trading range. As a matter of fact, it's still below this little downward trend channel right here. So it'll be important to see how they open this tomorrow. And if I recall correctly, it was trading down another hour or another point after hours. And what was that? CBNJ. Whoops. CBNJ. CBNJ, that I wouldn't consider a belt hold type signal. That's just an up day. That's called I think that's called an in-neck, which means it didn't really do any signal, and it wasn't, so it's not a piercing signal. So you watch this. If it opens lower tomorrow, you can be shorting it because all this was a bounce in a downtrend. The trading range, meaning the trading range was probably back up into this trend channel, and they couldn't bring it back up in here or close it back up in here. So that's telling you there really isn't a signal here. That's just an up day from where they opened it. So I'd still be suspicious of Apple if they open it lower. And again, that'll be a function of where the market opens. As we have seen, let's see, You can't see it right now. The YMs, or the Dow futures, are up 210 points right now. Okay, so some that you want to keep an eye on for tomorrow. AQXP held up reasonably well. So there's a target on this one, which is back to the top of this channel. So we're just waiting to see if this one will start trading positive. XL is another one that came down to the 200. It did have a big bullish move today. Now it's got a big long-legged doji with stochastics in the oversold area. Starting to watch this one to see if they can get this back up above the T-line. How much up in the trading range does it have to be to form a belt hold? It doesn't have, all it has to be is near the trading range. Let's go back to Apple. Had Apple closed right up in this area, or at least close to the trading range, that would be more effective as a belt hold. The fact that they've closed it still way below the trading range, it's still suspicious. The perfect belt hold would not have a tail at the opening. How much do you discount the effect of these belt holds if you're looking at the tails? If they have a little tail in the opening, had this opened here and closed here and then came all the way back up, it still gives you the same meaning. Told you they opened it way down here, took out a lot of sellers, and then the sellers were out of the way. Do the futures mean much at this point in time? No. The futures don't mean a hill of beans until about 5 minutes before the market opens. That's telling you what the big boys are going to do. Now, this is a belt hold. This came back up into the trading range. This is SWKS. Thank you, John. And so that's more significant. That told you as soon as they opened it, the buyers are stepping in. Now, had it closed right here, then it becomes a little bit more suspicious. You'd have to see confirmation. But this is a good-looking chart as far as telling you they wiped out the sellers. But it doesn't matter. Yeah, it doesn't matter. You'd like to see the lack of the tail, but the fact that they opened it way down here and brought it back up, that's your bullish belt hold. If there's a little tail down there, that doesn't mean all that much. The significant factor is they opened it way down here and brought it back up into the trading range. Okay. CLTX, for the ones that want to play a small price stock, this is exactly what you look for. Is when they pull back to a support level, in this case they opened it right on the T-line and started trading positive. Any positive trading tomorrow is telling you that they've supported here, the profit taking is over. And I know David L. pointed out CZR. That's a nice little J-hook pattern, and notice what it did today. In a market that was down 500 points, they were trading this positive and above this little resistance level. More than likely, that is at least your first target. Oh, was SFUNA belt hold? Yes, that's a belt hold. Now remember the significance of a belt hold. That means there was lots of sellers. They wanted to get out at all costs or any cost, and then the bull stepped in. That means there's a lot less sellers in the way, which means if any buying comes in, they're not running into any sellers. If I saw the market open positive, no, I would start buying immediately, but then I'd obviously watch to see what happens once it gets to our first critical support and resistance level, which is the T-line. If it came up here and failed, then I'd probably come back out. And I'll do that quite often where I'll buy here, comes up, fails, and get out here. So maybe I've broken even or made a little bit of a profit, but at least everything was setting up to be in the right trade at the right time. If it failed, just back out. And if I can get back out of my bad trades with a break even, that just makes you happier than a pig in doo-doo that you didn't lose money on a bad trade. Yeah, I think I've got SPWR here, but I'll hit it right now. Yes, that would I'd consider a belt hold. Didn't do a piercing signal, didn't quite close above the halfway point. Still has this little tail down here, but that doesn't mean anything. The fact that they opened it way down here and brought it back up tells me, all right, start watching this one. Now, I'd probably want more confirmation because it didn't close halfway up, and it might not confirm in the next day or so. But over the next couple of days, for example, if the market starts turning back up, I'm going to watch the belt holds because, again, a lot of these sellers were taken out of the way on this type of day. LXRX. Uh-oh. How did I do that? LXRX. Nice J-hook pattern in progress. And once again, this is kind of your circumventing the relative strength indicator. If you know the markets were down big and the stock that you're watching in a pattern is trading positive, that pretty much tells you the relative strength is pretty strong, that there's a J-hook pattern in progress. That you might see on the recommended list tomorrow. HMSY, big bullish engulfing. So a lot of people say, well, is this tail to the upside worrisome? Not worrisome, it's an indicator. Pretty much tells us that if this opens positive tomorrow, the profit taking of the day is over. We've already got a signal. And where did that signal occur? Right here at this bottom. So we're on a double bottom. If this opens positive, it tells us the profit taking's over. We know at least our next target is back up to test this recent high and see if they can bring it back up here. If they can get through the 50, our next target is up in this range, fill in the gap. All right, I wouldn't doubt if there isn't going to be some sort of rebound. Somebody let me know when the Chinese market opens up. Well, how come I keep doing that? EZPM, just one that looks attractive. Wouldn't be buying it unless it opens positive tomorrow, but just something to keep on the buy list. And because some of the biotechs are moving up, definitely want to keep an eye on the ones that are forming positive trading today. Scotty did a you're kind of a belt hold piercing signal. It did close about the halfway point. Oh, Victor, I don't know. I don't follow the Chinese market. Somebody, I'm just depending on somebody to let me know what the Chinese market does on the open. So this one I would start looking at. I'd be more apt to be buying it above this level, above the T line. And Abercrombie Fitch, big left-right combo. So there was something here more significant than the fact that the market was off 500 points today. They were trading this positive. This would become a very good buy if it comes back up through today's high, which is also the T line. Oh, was it earnings? Okay. Gap up on earnings. Oh, Sean, if this was the gap up on earnings, that information is now already built into the stock. So nothing here to get real excited about unless they can get it back up above the T line. LPI, here's a perfect case of, dang, Jiminy Christmas, I just can't hit my butt with either hand tonight. This one had opened lower, which would have been ready to go short on this had it started drifting lower, except it turned right around and came back up, which now makes this a good buy on positive trading. You had the big bullish engulfing signal, also kind of a belt hold, what we call a booster bullish engulfing signal. Notice what it really hasn't been able to do, even in today's market, or in the last 3 days of the market. They haven't been able to close this below the T line. So that's showing good relative strength, not because of any relative strength index, but because what it's doing when the market's trading that much lower. Oh, let's see. CEDG. There's a belt hold. Did we look at that one earlier? Maybe we did. But that almost a piercing signal. But again, yeah, I think you can go to Bloomberg, a lot of that information. John, hold on to your individual ones until I tell Jim to do the double line. But again, this is telling us that there is a lot of sellers that were wiped out today. This is what I would consider a belt hold. Even though it didn't come up anywhere into the previous candle, it came back up into the trading range. Again, a lot of sellers wiped out. I'd keep an eye on this one. That's got the possibility. You had this kind of wedge type formation. That one I would be watching to see if there's any positive trading. Maybe not in the next day or so, but if over the next couple of days it waffles and then does a bullish engulfing signal or something, that tells me this is still in effect. Oh, John, that's your basic. That's your basic learning of candlesticks, is the signals, the 12 major signals. Which one did we just do that had a piercing signal in it? That wasn't it. This one, Scotty, okay. A piercing signal is when you're in the oversold area and they open it at or below any of the previous day's trading, not just the body, but the tail. They gapped it down, and then the criteria for a piercing signal is that it needs to close more than halfway above that candle. So the halfway point is very important as far as signal. Yeah, so that's your basic ABCs of candlesticks. There's basically 6 buy signals and 6 sell signals. Then you can apply those to patterns, which makes knowing what the signals are representing makes the patterns all that much more effective. Okay, on the short side, QLYS also had this slow curve breakdown. So even though it traded positive today, this one you can still short if it opens lower tomorrow, because it was an indecisive day. If it opens weaker tomorrow, yes, a piercing signal could be a belt hold, or a belt hold could be a piercing signal, or a belt hold could be a bullish engulfing signal. But the evidence of a belt hold is the fact that they gapped it way below the trading range. It could come back up into the trading range and not really do anything that would be a This one didn't quite close above the halfway point, so it wasn't really any signal other than the fact that you could recognize that it was a belt hold signal, that it gapped way below any of the previous day's trading or any of the trading range and came back up into that trading. TSU, another one that has a slow curve, it opened lower and traded positive. Put your sell stop at today's open. If it comes back down below that level, good probability that they're still taking this one down, maybe in a channel like this. JJ, yes, I do look at volume, but that's usually on my scans before I even start. I want to have my universe as any stocks that trade more than an average of 200,000 shares a day. So anything that we're looking at was already from the trading universe that had volume involved. Now, okay, so all right. So Shanghai doesn't open until 9:30. All right, so that's going to be well past our bedtimes. So Abercrombie Fitch was a belt hold, bullish engulfing signal. So it is a bullish engulfing signal, and then because of the magnitude of the where it opened, it also is what you would consider a belt hold. So the more deeper they open these and bring them back up, the more significant they are, because that's telling you they've wiped out a lot of sellers. JJ, so yeah, volume doesn't come into play in any of these because they're all in the universe that they're trading the volume that we. Vince, yes, we can do a session on scans fairly soon. We're probably within the next week or so of. We'll start doing some more Tuesday night, Wednesday night sessions for members. Let's see, where was I? Okay, VIMC, showing some of the biotechs are getting hit, or some of the can't even think. Some of these are getting hit. Here's one that they tried to bring back up. Still makes it very simple. If it opens lower tomorrow, you can be shorting this one because you still have this kicker type signal to the downside, and they broke the support levels. That could be, let's see, Freeport, McMoran, a lot of the mining stocks got hit today. It could be, but again, it's going to move in the direction of how they open it tomorrow. So if they open this lower, it might be the next wave to the downside. And what else we got here? I'll get to some more of these mining stocks. We had shorted Momo a few days ago because you can see there was kind of a support level. We can draw the support level. And when we had that spinning top doji gap down through that level, kind of a bearish J-hook or just a slow curve to the downside, that told us they were probably selling this off. Now we're in the oversold area and we had a gap down doji. Still makes it very simple. If they open up positive tomorrow, we cover the short position. If they open it lower, we stay short. OAS, very simple trade setup. Stochastics rolling over. Let's see, let's make this a little bit sharper. Wave 1, wave 2. If this opens weaker tomorrow, you can be shorting this one. Because what's our simple rule of a doji? It's going to move in the direction of how they open it after a doji. So if they open this lower, that tells us they're going lower, which means this support level right here is not going to be holding anymore, that we're now in our next wave to the downside, It could be somewhat the same magnitude, but if that were the case, it'd go to 0, but there's probably a good percentage move to the downside from here. A lot of the energy stocks got hit. There's your bearish J hook. There's your gap down below the support level. This is COG on Cabot Oil. And Newmont Mining had a bearish engulfing signal, left-right combo, gap down. This one can be shorted on weakness tomorrow. Stochastics rolling over. Very simple. First target is to see if it's going to hold here. If it comes down here and bounces back up, then you get ready to cover. If it keeps going down through this level for the next couple of days, we know we're wave 1, wave 2, going into wave 3. So knowing what should happen after a signal or at a support level or a resistance level is very significant, because it allows you to understand what's going to happen at that level. Notice the trend kickers type signal on Cara. Cara we came out of, and now you can be going short on this one. You can still be going short on this one on a lower open, because the next target is back down here to the 50. And if it doesn't hold there, it's coming down to this level. So there's still more downside to this one. NFX. This one is just to give you an example of a failure at the T-line and where the next target would be. It would be at least coming back down and testing the lows. In this case, they gapped right through it. But here was your signal right here. Notice what this signal is, your bearish doji sandwich. And notice the significance of where it occurred. The doji was smack dab on the T-line and the 50. If they opened it positive, you still had an uptrend in progress, maybe a J-hook. The fact that they opened it lower told you could probably be going short on this, but now you were heading for at least this target and then this target, and you're still going lower. Stochastic still heading down, and you're not in the oversold condition. So again, knowing what should happen after your signals and what type of patterns they could form allows you to at least recognize where your optimal entry and exit strategy should be set up. Downtrend, tried to come back up, didn't get anywhere. Now we have a doji gap down, and we closed below this support level. That pretty much tells me there's probably some more downside to this one. BVN, left-right combo. Wave 1, wave 2, starting wave 3. Yes, and so that's why on these big mover days on Wannabe, that's why you go to your 10-minute chart, because if things are going to just keep flipping around, because nobody knows which way they're going. You've got the speculators jumping in to see whether the market's going to bounce back up. You've got the panic sellers still selling. The Asian Pacific markets are down. All right. So if that's the case, yep, the Dow futures are still up 193. INFI. This is where you kind of observe the obvious. The obvious is you had a resistance level, you had a downtrending channel. You came up and you touched the resistance level and came back down a little bit. But today they gapped it down. And where did they gap it down? Below the previous day's open, with stochastics rolling over. That pretty much tells me if they open this lower, now you have a bearish flutter kicker. At least my first target is probably down here somewhere, which is going to be a good 20% to the downside. Oh, who wrote that one? Terrible handwriting. PBYI. Again, another biotech. Notice how it's rolled over and did a kind of a little flutter kicker to the, or a doji sandwich to the downside. If this opens lower, you could be now in a wave 3 to the downside. And the reason this is good to go after is because we haven't had a real significant move to the downside. Well, I guess it was down 10% today. But this could drop another 50% over the next couple weeks if this market doesn't pick up any steam. Slow curve on TTMI. You can be shorting this one. Observe the obvious. They have never been able to get this back up above the T-line, and they're still got selling patterns. And GDX, a lot of the gold stocks, notice where it failed, right smack dab on the 50-day moving average with a left-right combo. Next day, they took it down below the T-line. Where's their next likely target? Bottom of this trend channel, down here somewhere. And U.S. Steel, we've still got this one short. Even though it tried to move up a little bit today, nothing yet to tell us there's any reversal in this one. So do long-legged doji signify anything other than examples? It just tells you it's gonna move in the direction how they open it tomorrow. So if they open this one lower, just told you there was a lot of indecision today. Tomorrow you're waiting to see what the indecision, what their decision is after that indecision. Same scenario on Coach. They're going to move it in the direction of how they open it. I would still suspect they could be coming down to the bottom of the trend channel. Okay, anyways, this is why you want to recognize what your patterns are telling you. And we had the prospect of a little J-hook type pattern, but fortunately David L. kind of pointed out that you had a big dumpling top going on in the Dow, so that with that alert, that should have said, all right, if they don't support right here and come back up above the T-line, we've got the prospects of selling off hard. So that's where we added some short positions. Just stopped in to see what indecision my decision was in. Yeah, I remember that stock. Okay, so with that, do we have any general questions on candlesticks? Do you look at both lines or just the signal and the main line or the cross? Now, I'm just looking at where they are in general. And to make it simpler, you could probably just even take off one of these, but they always use two of them. I'm not interested in them crossing because usually when they cross, that's a day or two behind when the signal occurred. I just want to see whether I'm in an overbought or oversold condition, or if I'm halfway in between and I get a buy or sell signal, I've got to be a little bit more cautious or a little bit more diligent to see whether that signal is occurring at this level versus at this level or at this type of level. Okay, with that, Jim, go ahead and do the double line. No volume. Vince, I don't understand that question unless I have no volume. Silver Wheaton, this one you can get ready to go short if it doesn't support right in here. So to stay long on something like this, or not even stay long, to go short, if it opens weaker, you can definitely be shorting this one. And AEM, Same scenario. Get ready to short this one on any weakness. Goldman Sachs. If Goldman is trading below the T-line, that means we're in a downtrend in the market. It's kind of one of the market indicators. You just stay short until you see a confirmed buy signal. You have a potential of a buy signal with today's doji, but it's still going to be important to see how they open it tomorrow. Ford Motor Company. Yeah, that broke the downtrending channel, except you can see they were buying. I would still be a buyer of Ford for long term, but I'm still waiting for it to come back up through the 50 because right now it's been indecisive. Now on a trade basis, you can be buying this one on positive trading with at least a bounce coming back up to the T-line. Yes, you might have wiped out a lot of sellers. And these are usually the, what do they call them? I call them blow-off days, where you've had a slow, steady downtrend, and then in one big day of big volume, they get rid of a lot of the sellers, and then you start looking for the buy signal. Disney, stay short until you see a confirmed buy signal. AMBA. AMBA has some prospects here because notice where it opened. Right smack dab on the 200-day moving average, traded lower but came back up. So I'd be ready to buy AMBA on positive trading with the anticipation that they're ready to bounce it up to the T-line. Then you just watch to see what it does once it gets to the T-line. The Qs, still important to see how they open this tomorrow. Now, if they're opening up 200 points, not necessarily a reversal in the market, but at least a bounce back up to the T-line. So you play it still very close to the vest or very, very quick profit trade setups. And OCAT, this one you can be buying on positive trading tomorrow. You've got kind of your little cradle pattern, not real clean cradle, but you got positive trade, a wee little teeny kicker signal, and it's trading right at this downtrending channel. So if it opens positive after today's profit taking, once it hit the 50, it means the profit taking's over. They're ready to take it back up one more time. The SPYs, again, need to see how they open this tomorrow. Starbucks. This one also, you have to see how they open this one. Even though it traded positive from where it opened, you still need more confirmation, and that's also going to be based on how the market's open tomorrow. Beat, you just stay long. There's nothing wrong here. You had some consolidation during the day, and this would have been a perfect case where if it opened and came back down through today's or yesterday's open, you could have bought it when it came back up through the open. So you might have missed out on the profits from here to here, but more than likely you weren't owning it for this type of profit. You're owning it for hopefully this type of profit to the upside. LXRX we did, and that one is probably going to be recommended because that's got a J-hook pattern in progress. Cree, you can be watching this one. Just needs more confirmation. I mean, as on a relative strength basis, it acted very well in today's market. So you've got a bullish engulfing signal, a few days after a bullish engulfing signal, and you're coming out of a fry pan bottom, a little cup and handle. You can buy this one on strength tomorrow. Just be ready to use the T-line as your stop. It shouldn't come back down through there. Hilton, another one that needs to see how they open it. If they open it positive, at least expect a bounce to the T-line. And ACAD, another one you have to see how they open this one tomorrow. If they open it lower, you've still got wave 1, wave 2, wave 3 in progress. Netflix, same scenario. Got to see how this one opens. And at this point in the market conditions, you're more looking to see what they're doing on bounces. Baidu, or not Baidu, Amba, that's got more compelling reasons to be buying it just because they based right on the 200. Look for a bounce back to the T-line. Baidu didn't really do anything, so it'll be important to see how they open this one tomorrow. BLDR, this one has to open positive to stay in it. It needs to stay above the 50. If it opens lower, I'd close it out. LOCK. LOCK you can stay with as long as it stays above the T-line. If you're going to be a buyer, I would be a buyer at 855, knowing that it came up through this little resistance level. It could have a good pop back up to the 50-day moving average. And Nally, you saw the failure when it got up here to the 50. Again, this is why I always say watch to see what it does once it gets to the next resistance level. We saw it had a shooting star. The next day they failed. So that, if you cut the chart off right here, you should have been out of this trade because it failed up here. Where was the next likely target? Down to the 50. Now you have to see how they open from here. Dan, I don't use Williams because it's kind of a lagging indicator, and the Ikomoku clouds work very effectively. I just don't use them. So one night we'll have one of the members that uses them come on and kind of give an illustration of how they use it. And again, if you want some topics, either send them to me through email, steve@candlestickforum.com, or if you're in the chat room during the day, just Gmail me or even put them right out on the chat room. We'll start hitting all the topics that people want to see now that it's not yet, but we're getting to the cooler weather and everybody back to their computers. Tesla, that was a blue ice failure. Came right up to the 50, did a failure. Next target was here. Had to see what it was going to do at that level. If you should be out of Tesla. I wouldn't be in it yet until you see more confirmation. And Whiting, we're out of most of Whiting right now. It looks like it's still heading down, but still going to be watching this one as soon as crude oil changes direction, if it ever changes direction. We'll start loading back up on Whiting. AMBC, this one you can short on any weakness tomorrow. If it opens positive, then you wait for it to close above the T-line. You'll be at a kind of have a double bottom in here. Whoops. IPHI, nothing here to get real excited about. Once they broke back down below the T-line, you should be out of it. You shouldn't be back in it until you see a buy signal and a close back up above the T-line. UNXL, you got the fry pan bottom slowly curling back up, which means there probably isn't going to be any significant move for a while. I wouldn't be buying down here just yet unless there's a very strong breakout. And BIOC, another one that doesn't have any direction yet. You do have kind of a little belt hold right at the same level it bottomed out before. I get ready to buy this one on the needs a strong buy signal confirmed. what did I just do? FSI. You can start watching this one. Just make sure your volume is good on it. It's setting up, so you could have a good 25% move back up to the 200. Cyber. Same, to see positive trading just to see a bounce on this one. So all these charts aren't telling you anything yet until you see confirmation, which is positive trading, testing the T-line. If they open lower tomorrow, you can, if you covered short positions, you can re-short them because that tells you the sellers are still there. And that will still be a function of how the markets are trading on the open tomorrow. ADXS, you can still short this one on weakness. Notice where it failed today, right smack dab on the T-line. Okay, Tazar. Another one that has to open positive. If you're short, remember, this is not a signal of any sort. So it needs confirmation. And GMCR, be ready to buy this one. Now you have a downtrend, stochastics in the oversold area, a left-right combo, and it closes just at the T-line. If it opens positive, you can be buying. Just use the T-line as your stop after that. And salt, nothing here to get excited about until they can get back up above the T-line. When you mentioned that you scanned for stocks, what it was the minimum volume look for? John, if I've got a medium-sized trading account, meaning somewhere around 250,000 or so, I want to see stocks that are trading greater than 5, and 5's my minimum on any trades that I want to do, and mainly because most brokerage firms do not margin stocks below $5, and I want to get as much leverage as possible whenever I put on a trade. And then I usually want at least 200,000 shares so that I can get in and out fairly easily. Not only get in and out fairly easily, but see how it's moving during the day with volume, with some trading going on. You can still buy a stock that's trading at 50 bucks and may only trade 100,000 shares because more than likely, unless you're big money, you're not going to go in for 5,000 shares at a time. You might go in for 200 shares, and that's not really going to affect a 100,000 share trading day. What does become effective is how fast or how often that stock price moves around during the day. You like to see it kind of trading with a flow to it. So obviously the bigger the account is, the more volume I want to see in the stocks because you don't want to get caught in a position. ACI, that's still a good looking chart. Wouldn't be afraid to be owning this one or even buying this one. The T-line is the 8 exponential moving average. The 3 T-line, you only really pay attention to that when something has moved significantly away from the T-line. Is this the start of a bear market or correction? How to tell? Well, it's already corrected. I mean, that's a pretty significant correction, which is what we would have expected after the dumpling top. So at this point, don't know which way it's going to go. That's why you let the market tell you what the market is doing. And if it is a start of a bear market, that shouldn't matter. At least you know when the charts aren't showing any positive, you should be in short positions. Oh, how come I keep doing that? BABA, that's not quite a belt hold, but it's significant. Still need to see confirmation that that the bulls have stepped in. BTU, that's a good-looking J or a good-looking fry pan bottom. It's consolidated. I'd be ready to buy this one on any positive trading from here. Because you've got this setting up. Plus, you've broken this downtrending channel. You did it with, make this big enough where we can see it, with a kicker type signal right here. And where do they consolidate back to? Right smack back to the T-line. I'd be buying this one on positive trading. You could probably get a good percentage move out of this one. STX failed at the T-line. If you're short, you've been tough to stay short on this one today. And this would have been another one where if I was short and that market was opening up down that big, I would have covered here. You can always re-short this on any weakness from here. EBIO, nothing here yet. You can see that it's trying to support on the 50. I'd still be a buyer of this one if it closes above the T-line. Or I'd want to see this trade above the T-line before I went into it. Lending Tree, nothing here either. Your stochastics is still pointing down. Even though you did a doji type day, you're still in a downtrend. I would suspect they're at least bringing this back to the 50. And AQXP is one that we're keeping an eye on. It held up reasonably well. They were buying after the open today in a lousy market. How much of what you were discussing appears to be for trading? Do you also use this system for long-term positions? And if so, how would the movement of the stock in relation to the T-line determine to stay in or get out long-term? John, the longer the term, the hold, the higher the moving average. The T-line for Ford Motor Company, I would be using this as a trade. Probably the 50 would be something I'd use more for a long-term. So I'd want to see buy signals that close above the T-line, and then when it started closing above the 50, then I would start applying it more to the long-term positioning. So remember, the candlestick signals are the accumulative knowledge of the buyers and sellers for any particular time frame. So it's just as effective on a 1 minute, 3 minute, 10-minute chart combination for trading the E-minis as it is on the daily, weekly, monthly if you're a long-term investor. Murphy Oil, big inverted hammer. Now you watch for a buy signal from this point. And yeah, so that inverted hammer is one of your high probability signals. If it opens positive, that usually means there's going to be an uptrend after that with probably a 95% probability or greater. UHS, another one that has to, looks like it still could open lower. If it opens positive, look for just the bounce back up to the T-line. Sprint came back up above the T-line. This one can still be bought on positive trading. That means your J-hook pattern is in progress, and you stay with it as long as it doesn't close below the T-line. Black box, I'd be ready to short this one still on weaker trading or a weaker open, because it's going to move in the direction of how they open after a doji, which means they'd be coming down through the support level, wave 3. On the other hand, if it opens positive, and now we're because that's pretty much telling me they're supporting at this level, want to start taking short position profits. Diamond Resorts, gap down today. I would stay short until you see a buy signal and a close back up above the T-line. And JDST, that one's a good signal. That's a good pattern. That's the bear funds for the gold miners. So you had a left-right combo and bullish confirmation. So you can be buying this one on positive trading tomorrow. So for long-term positions, it would make sense to flip to a weekly chart. Yes, if you're buying more long-term, and even if you're trading short-term, use the weekly, because if you've got a good buy signal and a good daily chart, look to see what the weekly is doing. If that's also looking good, that's just more confirmation that the buyers are stepping in. AMWD doesn't know which way it wants to go. So right now, I probably wouldn't be trading this. It would be hard to stay long. Definitely you would have not gone long today because it opened much lower. And it's going to be a case of it's going to move in the direction of how they open it tomorrow. Okay, so the Shanghai opened. All right. Murphy, did I skip Murphy? Murphy's got the inverted hammer, a significant inverted hammer. So if it opens positive, you can be buying immediately because the probabilities are extremely strong. They're going to take it higher just because of the inverted hammer signal, which also means the probabilities being 95% or greater that it's moving higher. You just set your stop right here. It shouldn't come back down through that level at all. Okay, all of them waiting to see what China's going to do. And Nu Skin, that one you should be out of. I should have been out of that one on Friday. Definitely should have been out of this on the open. What stop on Murphy is where if the probabilities are extremely strong that if they open up positive, they will trade positive, which means it shouldn't trade at all back below the low of this hammer or this inverted hammer. That all comes into play just by doing the scans of which sectors are acting the strongest. But yes, depending on what chart service you use, I can go in here and say, all right, I want to see all the Morningstar groups. Which ones had the biggest percent move? Today to the downside, it was silver. Then right behind it was gold. Or which ones were the strongest sectors? Go back up here. Those are closed-end debt funds or semiconductors, but they aren't good charts yet. They were just telling me. So I can go through just as quickly on the sector charts to see which sectors were coming up the strongest. WTI future. What is that, Don? EEV. This one I'd get ready. This is the ProShares. All right. If you're long this one, I'd use today's low as a stop. It shouldn't come back down through that level. Okay, so right now the market's telling us there wasn't any great buying. I mean, they bounced off the bottom, but they didn't do a reversal signal. So depending on where they open it tomorrow, and remember, even though the futures right now are up, they're up 300 right now. So that means we will be opening, I don't even know where that is. Yeah. If it's up 300 points, oops, that's not what I want to do. It means it's opening up somewhere right in here. So we have to, but remember, tonight's futures mean absolutely nothing because we're still 12 hours away at least from the market open. We need to see what it does, what it looks like tomorrow. All right, last two, Facebook. Nothing here. I was never intrigued with Facebook's chart until it broke out above this level. So that was one of the ones you could have stayed short on. But all the biggies you could have been short on. Netflix, Apple, Amazon, and they all failed. Tokyo down 3.47. All right. Okay, with that, I'll be on first thing in the morning before the market opens, and we'll see what to be doing at that point. Yeah, Don, but remember, this market bounced around hundreds of points all during the day. So being up 300 points right now is good, but if we wake up tomorrow morning, 12 hours from now, or whenever we wake up, and the pre-market futures are down 50, tonight's futures mean absolutely nothing as far as what the open is going to be tomorrow. So with that, everybody get a good night's sleep. We'll see you bright and early in the morning. We'll see you then.